What's up, everybody? Welcome to the Stocks channel. My name is Cory, and in tonight's episode we're going to do some more stock market technical analysis, and we're going to start out by looking at the ticker symbol SPY, the SP500 ETF. Now before we get into it, go ahead and smash that like button to help me out and subscribe to the channel to follow along on all of our technical analysis. Now let's crack open this chart and see what's going on in the stock market today. Alright, so we saw another very bullish day with the 7th green candle in a row, which is a very impressive run that we've had in the S&P 500. You don't normally see the market make a gain for 7 days in a row without any correction. Now keep in mind we still have these two gaps open below us, so there's still some downside risk where this market can come down and find support before heading higher, and we still expect the market to come up and test the previous all-time high at this $338 level. Now with the market going up 7 days in a row with consecutive gains, the S&P 500 is starting to look a little overbought, so I would not be surprised to see a day or two of red before we finally come up and test this previous all-time high. Now that doesn't mean we have to have a small pullback before coming up to this $338 level, but it's becoming increasingly likely as the markets become more overbought. They're more susceptible to a sell-off. Now looking at the trend, we still see the price closing well above the 5 EMA, and the price has actually been over the 5 EMA for 9 days in a row. So again, very bullish momentum in the S&P 500 right now, and we did find support at the previous $332 level, and we bounced off of there and we're starting to head higher on the 1 hour chart. Now you can see these gaps below are still open, and I do expect them to close in a hurry as soon as this market decides to go through a correction. With all the bullish momentum, it's more than likely going to have a correction after we reach the previous all-time high or a new all-time high, which I am predicting a price target of a 1x Fibonacci extension of the $341 level with a break above 338. Now we're still trading at the top of this Bollinger Band, as you can see here by this blue line, and that is extremely bullish, but it's also allowing this market to continue to run higher on overbought conditions. So keep in mind, on the S&P 500 we still see extremely bullish momentum, and there's no reason to try to short this market. Now if we jump over to the Nasdaq 100, we see the Nasdaq 100 had another red day, which is no surprise because the Nasdaq's been leading the way on this run and it's taking some time to cool off. Now today we did have a push down to the 13 EMA, which kind of squeezed this lower gap, which shrunk it a little, but there's still a little bit of a gap below us, and I would not be surprised to see the Nasdaq 100 continue to head lower until this lower gap is closed, and then possibly consolidating its gains before heading higher. Now a price target on the Nasdaq 100 I still have set at this $280 level, but it probably won't get there until it's done cooling off and consolidating some of its gains, which you can see here that it had a monster run off of the 5 EMA touching the 13. You had a sharp increase in the 5 EMA, had some nice separation from the 13 EMA, and now the Nasdaq 100 QQQ ETF is taking some time to cool off, consolidate some of its momentum and gains before it wants to go back up and close this $280 price target level. So remember, just because we had 2 red days in a row doesn't mean we're bearish on the Nasdaq 100, because we still have a lot of bullish technicals with these 5 EMA well above the 13, and we have this nice positive upward slope 20 simple moving average. So in order to see any bearish momentum take over, we need to see this 5 start to cross below the 13, and we're not even close right now. So if we jump over to the VIX, our fear indicator, we see the VIX had another lower close, which is exactly what we expect to see because the S&P 500 closed higher. We still have a nice correlation with the VIX closing lower as the S&P 500 grinds higher, and we want to continue to see that correlation. Right now we're watching the VIX to go down and try to close the gap from March when the crash occurred, which is a VIX level of about 18.5. So as we approach the VIX level of 18.5, it's going to be approaching S&P 500 new all-time highs, so we're going to continue to monitor the VIX, and we're going to wait and see if it continues to head lower or if it tries to start heading higher and go back up above our support level at this 23.5 level, which should now be resistance. So if we see the VIX head back up, we would be watching for 23.5 to act as resistance and the market to continue higher as the VIX bounces lower. So let's jump over to some of the other sectors, and we have the financials, which had another great day today, closing up about 0.7%. As you can see, the financials are looking extremely bullish, and it's now trading above the Bollinger Band, which usually means it needs some time to cool off and retrace a little bit before heading higher. So while the financials had a good day, I would not be surprised to see it cool off a little bit and consolidating a little bit before ultimately coming up here and testing the 200 simple moving average and seeing if it's going to break above and make a new high. So right now the financials are looking very bullish and broke out of this nice consolidation wedge pattern, and we're waiting to see it come out here and form a new higher high, which I am expecting it to close above the 200 simple moving average and ultimately come up here and test this $27 level. Now a close above $27 would be another very bullish sign, and that will tell us that a lot of these sectors are ready to form new bull runs and form new higher highs. Remember, higher highs form higher lows, which forms our bullish trend. So we're waiting and watching to see the financials continue this bullish breakout and start heading higher to test the 200 simple moving average. Now if we jump over to industrials, we see we had another monster day and we're starting to test new higher highs, as we can see by this red line here, which dates back to the high that we had on March 4th. So remember, the industrials are lagging behind tech, and tech's at new all-time highs, and the S&P 500 is actually grinding higher while technology is coming down and cooling off a little bit because the financials and the industrials are having such good bullish momentum as of late. So if we see the industrials continue to break out above this red line, which is our resistance in our previous high, that will form a new higher high. And you can see here today, if I zoom in, that we barely closed above this line, which is to be expected because of all of this bullish momentum and breakout that we saw before. As soon as we saw a close above the 200 simple moving average and a breakout of this consolidation wedge pattern, we said that we should expect to see some bullish momentum in the industrials, and that's exactly what we had, with some monster bullish days, as you can see by the size of these green candles and how explosive this move was coming out of consolidation. So remember, consolidation is like a spring coiling up and building up energy for its next move up, which makes the next move out of a consolidation an explosive move. So continue to look for the industrials to break out higher and form higher highs and higher lows. As it digests its recent gains, takes a minute to cool off before heading higher. Now if we jump over to healthcare, we see that healthcare is still in consolidation and it's still working on its next move, which I predict will be a move to the higher side, because we see the price nicely bouncing off the 20 simple moving average, as it's really just taking time off the clock and correcting through some sideways motion, which is nothing wrong. It's just digesting its gains and getting ready for its next move higher. So we still have the 5 EMA trading above the 13, and we're about to see the 20 simple moving average continue to break higher above the 13. So expect to see an explosive move as healthcare sort of tries to break out of this consolidation wedge pattern, and I'm expecting to see it break to the upside and continue to form new all-time highs. Now if we jump over to the dollar, we had another green close today, and now we've had 2 green closes over the 5 EMA in a row, which is showing that we probably saw the bottom on the dollar, at least in the short term. So if we switch to a 1 hour chart, you can see that the dollar seems to have found its bottom and it's now forming higher highs and higher lows, which is the sign of a trend reversal, because if we zoom out, you could see that the dollar was basically in free fall for the last 3 or 4 months. Now we're waiting and watching to see, because if the dollar shows some signs of strength, that will show us that asset prices probably need to come down a little bit and correct, because the dollar being weak has been leading to all the inflation in the asset prices. So right now it's looking like the dollar sort of broke out of this pattern where it was consolidating and forming a bottom, and it could be that the bottom is in, and now we've seen the break above this downward trend line, and the dollar could continue to grind higher and ultimately come back up here and test this resistance level. Now the dollar could get up to this resistance level and bounce down and continue its downtrend, or it could break out and show some strength. So we're going to continue to watch the dollar and see when it gets up to this resistance level, if it breaks out to the high side or just heads back down. So let's jump over to the DOW Jones Industrial, and we see that the Dow Jones is having absolute monster gains as well, with a very bullish explosive move to the upside. Now the Dow has been leading the way with the industrials, and it actually closed up higher than the SP 500 and the Nasdaq 100, so it's showing that industrials are starting to see a rotation and money possibly leaving technology and heading into industrials. Now this is great news for the S&P 500 because it means its gains are no longer only dependent on health and technology, and we're starting to see see some strength in these other sectors carry the S&P 500 to new highs. Now the Dow is also very overbought and has had some monster moves in the last 7 to 8 days, so it would not be surprising to see the Dow come down and possibly close some of these gaps before heading higher. Now for a price target on the Dow Jones Industrial, it looks like it wants to get up to about 293 before it comes back down and has a significant correction. Now that doesn't mean we won't see smaller price action moves in between, especially after a monster move like this. It would not be surprising to see a little bit of a cool off, consolidation, possibly wedge pattern like this, and then break out higher and continue its run. So going back to the S&P 500, we're really just waiting to watch the previous all-time high get tested. It looks like at this point it's almost a guarantee that the price is going to go up there and at least test that level. At this point, a test of the previous all-time high is literally only less than percent away, around 0.9% to test the previous all-time high. So it could literally test the previous all-time high as early as tomorrow. Now once we hit the previous all-time high, it's going to be interesting to see if we get rejected and start heading lower, because now we'll have to start talking about a potential double topping pattern, which we'll get to when the time comes. But right now we're just waiting for the S&P 500 to get up to that level. Support is being found as fast as the 5 EMA. As you can tell, the price has been extremely bullish and trading well above the 5 EMA, like I said, for 9 days straight. So the strongest support right now with how strong the trend is still the moving averages, but we do have these gaps below around $330 and $327 that we also expect to act as support in any event that there's a correction in the S&P 500. So please remember to like the video if this helps you out, and remember to subscribe to the channel to keep up with all of our future technical analysis videos. So I hope you're all having successful trades. Good luck out there, and as always, I will see you in the next episode.